we have a smaller community, so I think we'll go on taking questions as we go through each of the topics out here. So what I intend to do is to start with an introduction for Sriram, Joshua, Vishal, and Jordan. Starting with you, Joshua, give a short introduction and then we start on the questions.
Small correction. My name is Sriram, not Joshua. I am with the ANZ Bank. I am the Chief Operating Officer for what we call the Corporate and Institutional Banking. And I'm based in Singapore. I cover all the markets that we are present in. And I'm not a technologist, but I'm deeply involved with matters such as technology.
Thank you.
I am Joshua. So I'm the global lead for blockchain activities within HSBC. I'm based out of Hong Kong. I work for a commercial bank. A lot of the activity that we've been focused on has been trade and trade finance for the last few years, so I'm excited to talk about that today.
Hi, my name is Vishal. I head the business development at AgriCorp International. We're an agri-commodity trader and processor based in Singapore. We are a user of trade finance from banks like ANZ, HSBC, and we are also trying to innovate as much as we can using the blockchain-based platform developed by DLT2. So we've been able to get some first-hand experience in trying to incorporate blockchain into our existing modus operandi, and it's been an interesting ride so far.
Hi everyone, so my name is Jordan. I work with Standard Chartered. I'm heading digital initiatives for trade for the bank. So a lot of the projects which we do include the use of blockchain in the trade context. So I'm looking forward to talk a bit more about that today.
To start with my first question, we not go tech, we can give your perspective. So it's like we have seen few success stories in terms of the use of blockchain from a very minimalist way, and it's progressing across in many organizations today, which is in trade finance. So I just want to get your perspective on the use of blockchain from a trade finance perspective, from a bank's perspective. What do they see it as a strategic move, or it's more of a tactical move to compete against another banks, or what do you see as blockchain helping you?
Thanks. I do think as a technology, there is obviously a lot of promise in the public discourse on how much this can offer to us, whether it's distributed ledgers or blockchain. But I think from a bank's point of view, the way we think about capabilities such as this is actually a few levels above, which is at a strategic level, what really matters to the bank in the sense of offering to the customer, what does the customer really want, as opposed to chasing the technology behind what blockchain might do. So we are, by the way, we are not claiming that we are ahead of everyone else or we have done everything right, so we are learning our own pathway. But the important point from the way we look at it is, how do you really allocate capital, very scarce capital resources, to what kind of outcomes? And then comes the question of technology, and then is it blockchain, and then what kind of use case, etc. So we are not different. We are in the game with many other banks, partly in this panel, and we are learning our way through. And I personally think there is promise, but this promise has been on the table for the last few years. At some point, I'm hoping it will turn into some reality.
Thank you, Sriram. So Joshua, you had done some early work around blockchain, so you have a lot of learning, which has come out of it, and just to give your perspective on how, from your bank's perspective and your own perspective in terms of how blockchain can use utilized in trade finance, and what do you see going forward?
Sure. I think I agree with you, Sriram, in terms of saying that it needs to come from the business side first, and technology is an enabler. So I was trying to digitize trade before I worked in blockchain, and you always come to the same problems. You have a good solution, but you can't scale it. Or you have a really scaled network, but the technology takes forever to change because it can't make any decisions and things like that. So we wanted to try to figure out how we could actually start bridging all of these digital islands the ICC calls, because it's not like we're not digital. As a bank, we're digital. If you're a corporate, you're digital. If you're a port or shipping company, you're digital. It's just there's no connections between all of them. And I think that's where blockchain really got a lot of excitement internally and within the industry, in terms of it would build this infrastructure, it would build the connections between all of these systems and provide that common system or a common standards even that would allow digitization to happen. So we see it as a real catalyst. And that has been very powerful. Then of course what we had to do is figure out how do we use it. As banks, we're not really great at using sort of leading edge technology. That's not how our risk systems are set up. So it will take time, but I think as it's maturing and we're getting to that stage now, I think now we're getting a lot more comfortable with it. We know it a lot better. We're sort of narrowing down the use cases. We're narrowing down how we're going to be using the technologies and what technologies work for what use case. And now we have to make it work and start that commercialization journey.
Yeah. So, Vishal, I'm sure you're going to give me a very different perspective. Do you mind if I come to you after Jordan, so that we get all the banks lined up, and then, so Jordan, what is your experiences around blockchain, and then what do you think, DLT for trade finance?
So there's been very strong interest in that technology. For the past 4 years, I would say, if you look at the first few POCs that were done. And often we are still asked, so when is it coming? So the thing is that it's live, because you have a number of platforms with limited volumes, but you see now platforms coming live. So it's not necessarily about the technology anymore, right? And as Josh said, we are narrowing down as an industry use cases, and when we found out the pockets of efficiencies and valid use cases that make sense for business that we can invest more on. Really, the stage we are at now is all about adoption, right? It's agreeing on whether we're going to use an iPhone or a BlackBerry or something else. Finding what will be the standards, what will be the platforms or the networks towards which we are going to converge, not as banks, but as banks plus corporates plus customers plus. And that's where we are now as an industry. So hopefully, as we go through more and more of those platforms emerging, as in any cycles, some products are more relevant than others, and then people start to converge towards those solutions. You will see adoption coming up, right? So most probably the next 18 months to 2 years is about conversions towards those networks that are going live.
Yeah. So it's very interesting. It's very positive that we have a technology, but it's probably searching for a problem. So I don't know. We have a technology which is quite different from the traditional databases and how things used to be on the technology side. So Vishal, for the last I was just catching up with you. The last 6 months, you had initiated on blockchain, and you worked with several banks, in terms of digitizing AgriCorp, and running it, of streamlining your processes and torying to get through it. So you have come through real life experiences in terms of using blockchain with these banks and all. So I just want to get towards the beginning of our session a bit of sharing from your end on your experiences in terms of blockchain and with the banks, which in specific.
I think for us as a commodity trader, the concept of blockchain is very exciting. For us, the benefits that we see is with regards to transparency of information on counterparties. Which are counterparties to avoid, which are potentially fraudulent bank accounts, things like that can be shared on a blockchain with a critical mass of users. We also see it as a good way to make the trade finance process a little bit more efficient with regards to how documents are transferred between a supplier to a trader to a financier to the end customer. And the last aspect is something new that we've discovered in the last 6 months or so, is actually on the sustainability side. A lot of the customers that we work with, a lot of our financiers that we work with, especially some of the developmental finance institutions, want to know exactly how we're sourcing our product, and how the suppliers that we work with, how they are growing their product, how they are manufacturing their product, what are some of the processing techniques that they're using, and the kind of impact that it's having on the environment. So information like this can also be captured in a seamless and authentic way on the blockchain too. So these are some of the areas that it is where there's some strong potential with regards to blockchain. Of course, one also has to be realistic. I mean, we are in an industry that's 400 to 500 years old, and where there's a great deal of inertia. Not just from the banks, but also from traders such as ourselves, from our customers, and from our suppliers to change the way of doing things. Think documents such as bill of lading, letter of credit have been age old, right? And that's still nowadays people want to see physical documents to authenticize the trade that they're working on. So that's something that we have, that obviously that's the status quo. That's obviously something that we're trying to disrupt a bit, working with startups such as DLT. So that's something that we're working on, and I think I agree with what Jordan was saying, that the adoption is something that will take a little bit of time. 18 to 24 months is I think the right time frame. I think that's what it'll take.
Yeah. So Sriram specifically requested me that don't ask any more technical questions.
No, by all means.
Yeah.
So only the answer is the problem. You can ask.
Yeah. So he was speaking about a couple of challenges in terms of adoption of new technology from customers, be it large or small customers. So do you think, from a bank's perspective, will you have any investment or initiative in terms of, making more digitized kind of traders coming over to you? Does it make sense for you as a bank?
So the way I think about it is, somewhat unfortunately, trade finance for decades, ever since banking started, has been notoriously paper intensive around the world for all banks. There are 30,000 banks in the world. Most of them do trade finance if they are in the corporate banking business. And the industry may be 400 years old. ANZ, for example, is only 188 years old. So I feel better about that. But it's difficult to change large banks in the sense that banks cannot change the entire ecosystem, which is why former, in 1990s when I was in trade, I remember Project Bolero, and it was at that stage meant to be electronic, making it digital, but it went nowhere. So banks, I don't think, are energized to try to change the entire ecosystem to suit how they would like to see it happening, unless there is equal participation. And there is no free lunch, so you have to invest provided there is something in it, in the sense of returns. There is the other angle about, use the word interest. The way we think about it is, when I reflect on the many opportunities of what you can put your capital to improve, there is a question of how much you are aware, how much you are progressed to interest, and how much you have progressed further to adoption, and where you sit based on which technologies. So DLT blockchain is one thing, but if you think strategically, it's a collection of toolkits that these days are available, and I tend to refer to them as ABCD, which is artificial intelligence, blockchain, cloud, data, and you can extend that. So it is all of the above, and what matters to the customer as opposed to just one. So I guess my point is, generally speaking, the reason why banks have not made, we think banks have not made adequate progress is because once you go external and you try to change the ecosystem externally, it is that much harder. However, what we are trying to also ask ourselves is, can these technologies, such as blockchain, be used for internal only applications? So if you take ANZ, for example, we are present in some 25 odd countries, And in many countries, we treat our own branch as a separate legal entity. And we deal with our branch. If you open a letter of credit from New York to ANZ Singapore, we treat it as two companies. And you wonder why, and then there is a whole machine behind the whole thing. So we are trying to explore how to deploy this technology for internal only use cases, which then becomes almost completely within control, as in I could take a call as to what we want to do. So we're still there.
Yeah, so you are still very active in terms of using the technology. That's quite positive.
Exploring the technology.
Yeah.
We haven't.
Yeah.
We can claim we have gone live on many things,
Yeah,
but
yeah.
it's not scaled.
Okay. Yeah. So Joshua, similar to what Sriram was mentioning, what are the type of use cases which you see in and around trade finance or interbank side, which you see as the use cases which are more relevant and probably you will find success within or external to the bank?
Sure. Well, I think the interesting switch that's happened in the last sort of year or so, or even less than that, is that as soon as you go out from experimentation to commercialization, and you put it in front of a corporate client and say, this is something that we now want you to use, nobody cares about blockchain anymore. There are no more questions about consensus mechanisms. It's all about, I don't like where that button is, and what is this user experience to my staff, and is this going to solve a pain problem? So I think a lot of times we think about use case development in terms of a good fit for the technology, but what's also equally important is what pain problem are you solving for clients? So as long as you're solving a problem for clients, for the users of the platform, whether they be bank staff or corporate staff, then you will have adoption. And I think that's going to be the key in terms of getting the use case is we need to test, we need to iterate. If we get it wrong, we have to admit we got it wrong and change it and make it better in the future. Digitization of trade is going to happen. It's been sort of long overdue for a long time, and now there's great momentum towards it. And I agree, I think someone mentioned that this industry is based on inertia. For a long time, that inertia was to do nothing. And right now, that inertia is to digitize. So I think the currents are going in the right direction. We just need to make sure that we're continually making sure we're adapting our strategies, technologies, how we're using it to meet that requirement. Right now, what I've seen the most attention and the most sort of acceptance of is by not changing too much. I think we're going to come at this from two angles, right? Some clients will want sort of a huge step change, like really revolutionize everything, make it completely different. But a majority are going to say, okay, just make my life just a little bit better and don't charge me too much more for it. So the sort of, medium value, low cost solution that someone can provide is going to be a winner. And that's something we're really keen at being a part of. And I think that's kind of the holy grail right now. And then once you have that, then you start to get network effects, and everything is driven by network effects in this industry. And then you can start driving all sorts of new innovations on top of it. But that's what we have to focus on, I think.
Good point. The momentum is still there. It just started off, and then the inertia, is moving away. So it adds to Jordan your point. So Stanchart had been doing a lot of trades on blockchain and with customers, and over the time, you have seen a lot of document consensus and other acts, coming across, and you're making faster payments across to your customers. So. Just a quick one in terms of what Singapore as a country is doing. I'm in one of the working group. So next year they're going to pass legislation on the parliament in terms of accepting e-documents on our ports and banks' requirements and all. So Singapore will be one of the first countries which will legalize all e-documents. So there are organizations which are tasked with it, and they are working on it. They have formulated different working groups and all. So the momentum is there, and in your bank, so do you see internal resistance in terms of stopping it from risk side, or you see that this is going to happen? So
that's a good question. So so you could have internal resistance if you try to push a project because it's blockchain, but there's no client, there's no use case. And you want to just try and develop something because you think there might be somebody willing to take that.
my question was in specific to trade finance.
Yeah,
so customers asking you that we are digitized, we are in blockchain, so the bank needs to support them in trade finance.
Yeah, so I'll come to it. So what I'm saying is that that's with, as in all industry, we'll be looking at return on investment and whether it does make sense or not. And that's a lot of changes for the teams as well. So if you go with a pure tech angle, you're going to get a lot of resistance because it's new to the bank. It means a lot of changes. We don't know what you're going to get out of it. But the truth is that a lot of that change is driven by clients.
Yeah.
And I don't know a bank which is not client driven. So if with the level of corporate interest we have in that space, that's driving a lot of the changes, and hopefully that's helping us move much faster. So there's a few changes that are happening, and I can speak on behalf of the bank, but I think that's sort of happening in the industry. Is that if you look at the way products are developed, right? So and that's maybe blockchain was a trigger for that, just because it's a new tech. But the way products are developed in the sense that you don't have bankers having an ID somewhere, stepping away from the market, develop for 6 months, a year, and then go back and say, hey, we have a new product, and to realize that maybe it's not exactly what works. Now you have in that space, especially in trade and blockchain, a lot of the products and solutions that are designed are co-designed with clients. And this is where there's a lot of engagement with startups or experts that are able to develop solutions using this new technology, working with the banks, but with clients, step by step, agile, we do sprints, we do reviews, towards commercial adoption, right? So we have adoption in mind, we have the client in mind, and by developing step by step, the investment which you have to make upfront is not huge. You make a small change, you make sure you always have a client with you, and you keep listening to that voice as you develop your product. And with that actually came a few use cases, right? So we've done a smart guarantee blockchain-based solution in UAE last year with a client. We've done a transaction with dltledgers and Agrocor earlier this year, and this is always client-driven. That's a core driver and one of the changes that happen. The other one is that in trade, and because of blockchain, that has really pushed collaboration between banks. If I talk to other industries, because trade is, you have the banks, you have the corporate, you have the shipping lines, you tend to see energy traders, for instance, coming together and setting up a blockchain platform, trying to solve their issue in their industry, and there's a lot of collaboration happening. You see there's a lot of collaboration happening between banks now with a number of consortiums in different geographies serving different products. Shipping lines are also starting to move in that direction. So what actually the technology has created in trade, it's enhanced the collaboration between various parties, right? At least as an industry. The next step would be then to connect the industries together, but at least and that has been a big change and a big use case actually. It's a derived benefit from the technology, which is collaborative in essence, to actually encourage industry players to work together towards a solution rather than trying to change the industry all by themselves.
So Vishal, coming back again to the trade question, you spoke about like 300, 400 years and a lot of documentation, going manual. So you have put forward several trades across to the banks in blockchain, and you have built, the digitization of those documents and submissions across to the bank, like when it comes into a certificate of origin or the sales contract or commercial invoice or maybe a fumification certificate or anything of that sort. And you have given bank access to your trade, end to end, from your supplier all the way to your buyer. Now, what is your ask to the bank? Because you are giving them much more than what the bank is asking you to give them. I really wanted to ask you. I'm curious about it. So, what is your ask from the bank?
Sure. So.
3 charts.
You know, so we've done a few trials with a few banks. Jordan spoke about what we've done with Standard Chartered Bank already. Commodity trade is one of the biggest examples of free market dynamics in the world, right? I mean, very low barriers of entry. The competition is strictly on price. If you're cheaper than your competition, you'll get the business, kind of thing, right? So there are no free lunches. Everything is quid pro quo, and that's what I expect of our bankers as well. So if we provide an increased level of traceability, better assurance on our counterparties, such as our suppliers and our buyers, if we're able to reduce the onerous nature of documentation on the bank side, such that there are cost savings that the banks get as a result, then we do expect that the bankers would give us something in return. So that be that in a better flexibility in our facilities to allow more pre-shipment financing, or potentially a lower cost of financing for our existing facilities. So I think that makes sense. I think right now what we're working on, and hopefully in the next 18 to 24 months, is that banks do enough work in this in using blockchain such that they're able to realize the benefits themselves in a way that they can see it on their P&Ls. And when they do see it on their P&Ls, when there is a dollar and cents metric to it, then that benefit will be shared with their customers.
I might just add that we do see it in the P&L, but it's on the wrong side of the P&L currently. That's the challenge. If I may say, one of the things that we have asked our corporate and institutional customers around the world now for several years is, when you use the word digital transformation, what do you really mean when it comes to banks from your point of view as a customer? And roughly along the lines of what Vishal said, and over time, 4 things stand out in the way we evaluate this. One is, not necessarily in this order, but one is that we hope you, Mr. Banker, you're investing in technologies that can get integrated with ours, not the other way around. Don't ask me to change mine to integrate with yours. So we need seamlessly to be integrated with banks to integrate with us. Second, we do need you to make payments as smooth and frictionless as you can. Believe it or not, banks can't do it that well, which is why we have payment as a big industry in the sense of fintech. 3 is, you got a lot of our data, and you have a lot of data on the industry that we are part of. So please give us some insights into what you see, which is not confidential, and help us in our business strategy.
Thank you, Joseph. So maybe with this point, so I probably want to pass the mic to one of you, or maybe several of you, to get involved in the discussion. If you have any ideas on, should we play this chicken and egg game, or so should someone come forward and do better than the other? So maybe
So interesting panel discussion. We've been following a lot of work that's going on in the trade finance world. There are companies in Singapore like Commerce, Blockbank in London, which have been disrupting the space. I mean, they are operational today. They've been giving out loans in the billions of dollars. There are blockchain-based banks that are coming out. There's Dharma loans, which have been lending out in the millions of dollars. So, do you see massive disruption happening? Do you see that the banks won't exist in the current form? Would they be massively downscaled over the next couple of years? And if that's going to be the case, what do you see banks do in the future if they're not lending out loans, if they're not doing trade finance, if all of this stuff is going to be done by distributed autonomous organizations or by better, more enhanced private institutions? How do you see banks surviving?
I hope you're wrong. I want banks to survive for at least 15 years more. But I really don't think and this is not an arrogant statement coming from a banker, but I think that is a stretch in the sense of one technology called blockchain eventually, eliminating the banking industry, because I personally think somewhat Joshua indicated this, that the language that we are now using, which is the technology, which is blockchain in this case, or DLT, whatever, that will go off the curriculum and the syntax of how we are speaking, because I don't think many people will care beyond a certain level. So long as there is improvement, and we must remind ourselves that banks have a role to play beyond only making trade finance a little bit more efficient. There is a fairly big, I can go on about what else banks do, and you would have an idea about it. But the caution banks ought to have is really not to be complacent and arrogant about their historical, sense of importance, self-importance, but to play the part working with, fintechs in this case. There is a reason why banks have sustained for, 200, 300, 400 years, and they add value in many ways, and technologies have come and kept improving. And who is to say what will come after 10 years? So I think it's a good challenge, but my response would be, from a bank's point of view, to listen and to adapt and to continue to make money wherever possible in a proper way.
Yeah, so I would say that I don't think banks are being disrupted now. I think there's always the risk of that in the future. And I think that's part of the reason that banks are interested in investing in technology, because it is important to the ongoing survival of banks to offer a solution that clients want and need. And if we stop investing in that, then the risk of disruption goes up. But I think what we've seen in the past is that there could be lots of other sort of fintechs or financial companies or technology companies that want to provide finance. If they hit a certain level, as soon as they start becoming regulated as a bank, then they sort of don't want to go any further. So we see a lot more partnerships with technology firms now than competition from them, to be honest. Because that's a mutually beneficial arrangement. Technology company gets to do what they do best, which is build leading-edge technology solutions. Banks get to do what they do best, which is operate in a heavily regulated environment in a way that is satisfying to companies large and small, who expect a certain level of permanence from their banking partners. So I think that's likely the way it's going to continue for at least now, but I don't think we should say there's no risk of disruption. I think there's always risk, and it's important to keep investing, to continue including them in the discussion to make sure we're getting better and better.
Yeah, yes.
Just to add on to that, when EMB cards came in, like banks adopted EMB cards and continued their monopoly. So every time a new technology has come in, what bigger players have done is they have adopted that and continued their monopoly. Now, in such monopolistic environment, where do you see startups or smaller companies or technology providers fitting into your ecosystem? Because I'll give you one example. I had a friend who broke ATMs. He was a PhD student in Cambridge then, Mike Bond, and banks went all after him, like, cases and all that. So anyway, he couldn't publish his thesis in England, he had to go to France. So where do you see smaller companies fitting in, partnering with you? Because you are always tending to adopt, say, your IBM x86 chips that you have for mainframes in ATMs, for mainframes for the ATMs. So your legacy issues, contracts, all these things, are for decades.
Okay, yeah, I can take it. I'm not sure about the whole monopoly situation, to be honest. To the point where do we see collaboration? So first is I don't think we're trying to do something which is not really. We will go beyond what we do. So let me take an example, right? So we have done transaction with dltledgers. I think I can safely say that we don't plan to do a standard chartered dltledgers because it's not where we are, but we see collaboration, we see partnership, right? The proof of concept that I mentioned before, that was done on blockchain last year. is done with a startup. One of the other consortium we are in for letters of credit, Voltron, is done with a startup which is based out of Hong Kong, which is, doesn't have the size of the bank, but is very good at deploying on this technology. There's a number of examples where partnerships have worked, and we are not here to stop innovation, right? I think we recognize the fact that a lot of innovation can't be driven by such a large and regulated institutions. So we have legacy systems, we have specific expertise, we are way better off partnering with external parties to do it. So I think far from us the idea to go after some new company because they have something potentially disruptive. The partnership works because we bring, the industry is regulated, so we bring the infrastructure and the fact that we are embedding a solution into a wider ecosystem that ensure that finance is sustainable. And on the other side, we find partners that are very good at innovation and are ready to basically bring that into such an ecosystem.
Yeah, so I think I was quite nice to bankers, and so I will not pass the mic out anymore.
I don't mind adding one more point to. I think I'll grant you part of what you said, which is that banks also have to adapt themselves in learning how to deal in a positive way, not necessarily improving their own personal situations, but. For example, I deal with a number of fintechs. I have had one fintech 6 months after they worked with us, the CEO came and he put up his hand and he said, Srinath, I give up, I can't deal with your bank, it is impossible. And they actually walked away. And it is real life, right? Our terms and conditions, clause number 89 says you will pay me $10 million if something happens. He says, I don't even know how many zeros there are. And we won't change our terms. So we have now changed, of course. So there is something there that we also have to adapt to enabling a successful partnership, and that is rapidly changing. This is probably a 1.5, 2 year ago story, so I think those days are now past. But it won't be to that extreme that we probably need.
Yeah,
I think we should hopefully have some innovation in procurement legal.
Yes.
I think that would be mutually beneficial. But we are seeing the change. I want to hear from you though, actually, Samir. So you've contracted with a few of the banks here in the room. It was obviously not impossible, but hopefully we're getting better.
My experience is like, for me, I thought when I started off like 2 years back and I want to bring in blockchain to traders, it's more like, I want to work with the real users rather than with the shippers or bankers. So started off the journey, and we have around 120 to 150 traders in the platform today. We have done quite 2,000 plus transactions with multiple banks. When I approached the banks, I thought banks were like big elephants, so I can't even talk to them. My experience has been really good, so this far. I don't know what is happening in the bank. Maybe you guys are scared of fintech stuff, or I don't know. But I had a red carpet welcome, and it was really good to work with all the banks whom I have worked with this far, and we have around 15 banks, I think, in the platform. So my experience has been really good. So the banks are trying to work with the ecosystem, not to try and develop everything internally, because they feel that we are multi-banking platforms are what you need for giving options to the customers, which makes a bit more sense from your end. Yeah? So that's my experience. So Vishal, back to you. In an ideal world, you have all your suppliers and customers networked with your shipping, logistics, and your banks in your private permission blockchain. So, which is, sorry to use the word blockchain, but in your ideal world, you have built that for your organization. So, what would you, ideally see as your wish list in that? So, if you can build that.
So, I would add to your ideal world. I wouldn't want to ring fence our own blockchain. I'd rather have the ability to interact with other traders who built their own blockchains within the same platform in a way that we have cross-party sharing of certain information, such as matters pertaining to fraud and other issues that would strengthen the value of using that particular chain. Obviously, the secret sauce to any trader is price discovery and access to suppliers and customers, right? So you don't want to share any of that with your competitors, but other aspects such as the matters concerning security is very important and very valuable. And I think all traders would agree to participating and sharing that kind of information.
Yeah.
In this ideal world, I think we have a scenario in which ourselves, our customers, and our financiers have a mutual benefit in the efficiencies that we're able to extract out of using the blockchain, because with regards to transparency of information, sharing of digital documents, lower cost of operations, and lower cost of financing, all of that should be realizable with that.
Yeah. And what do you think that will build itself to? So will you become, if you have excess fund with you, for example, will you become the new trade finance organization to another trading organization?
No, I don't think we'd ever be able to compete with banks to become a trade finance provider ourselves. I mean, that's just not our core competency, not something that we're interested in. Even some of the largest commodity traders in the world, say a Cargill, $100 billion revenue company, they're not a trade finance provider. On a case-by-case basis, they provide supplier financing to trusted counterparties, but that's it. The scale of their trade finance book is nothing compared to any of the banks sitting on this panel.
You're really good in cotton, for example, so you know what's going to happen in cotton, and then you're seeing other trades which you are connected to in terms of supplier-customer relationship, and there is a trade and you can take the risk on in terms of the price. So what is wrong in financing that? Because you know cotton better than a bank.
That's actually debatable. I mean, banks right now are pretty sophisticated. They do have experts within their teams that understand the commodities that they're financing quite well, especially very liquid commodities such as cotton that are exchange traded. So banks in fact do have certain mechanisms of financing, such as repo financing, in which they do actually take ownership of the goods. You sell it to the bank sells it back to you, as a means of actually financing the goods, as opposed to using a standard trade finance facility. So that already exists. But we do have opportunities to support fellow traders by extending trade finance to them, by virtue of the fact that we, as a sizable player in the market, do have access to the kind of facilities that smaller traders may not have. So from time to time, we do engage in those kind of opportunities, but it's never going to be a core business for us.
Yeah. So Joshua, if the momentum increases and the supply networks get created in multiple industries, and imagine it grows as a high network, with multiple interoperable kind of chains, whatever it is. So what do you see as that world, and what will be the new business model which will evolve from there?
Yeah, well, I think that's actually interesting to look at, because when you start to forecast out and you say, okay, what is this actually going to look like once you get sort of large market participation, and you start to see volume on the platform, et cetera, I think there will be different elements of how risk is mitigated, on how working capital is provided. I think what's going to happen is the product set is not going to be anything close to what it is today. So right now the product set is very delineated, right? You choose how you're going to deal with your trading counterparties based on your relationship with them, the requirement for working capital, the requirement for risk mitigation, and then everything is dictated by that. I think in the future you're just going to trade and then look at specific parts of that transaction that need some sort of risk solution, that needs some sort of facilitation, or that needs some sort of finance. And I think there'll be a number of providers that will provide those solutions. And I think that is going to be the future. It's going to be much, much more sort of fine-grained control. It's going to be very customized to each individual transaction. That's very easy to manage and very easy to see. And I think for banks, that'll give us the ability to provide much more sort of micro products that are not tied to just this one.
Yeah. So just growing up from there, Jordan, do you think, crowdfunding, which we see, if all the price risk and similar risk is calibrated for a qualified trade between A and B, why should they go to a bank? They can go across to crowdfunding in terms of, will it happen?
I'll touch on that just before, because I think that point is very interesting, right? So just want to bring it to life, right? Imagine that all oil traders, regardless of the bank, regardless of their size, regardless of their history, just because they are in that industry, would have the same credit limit and the same price. It doesn't make any sense, right? So we go down at looking at balance sheet, relationships, type of flows they have, and then banks give a credit limit, right? And this is where the industry is today. I think moving forward, where the industry is going is just to do what it should be doing, which is transaction banking. So we look at transactions. We have enough data points, we will have enough data points, we will have enough transparency of what's happening to go the next level, which is actually scoring transactions, right? And that's really what's happening. So it takes time, and as of yet, we are building the infrastructure, we are looking at efficiency, we are looking at putting everybody on the same networks or same network. But when that's done, then it's all about data, credit scoring, brought down to really the transaction, right? It's not only for the banks to change that, because the regulators have to understand that the capital constraints around those type of credit assessment can't be the same as what they are today. The products we have will be updated. This is exactly what Josh said. So, but this is really how you should look at it, right? So it's just doesn't make sense with so much data being available to you to keep looking only at balance sheet. You have to look at transactions, and with the engines we have, we'll be able to do it. So to your point on, it's related actually to the point on crowdfunding. When you're able to do that, then yes, you can offer transactions to the market actually. Right? Again, nobody has the manpower, resources today to look at each and every transaction in terms of finance, not finance. But as you are building up engines, you'll be able to do it. And yes, some transactions, banks will be able to take the risks, but up to a certain point, and maybe you would have some other investors that are a bit less risk averse, maybe a bit less regulated, that will be able to say, okay, I'm going to take that because I have a higher risk profile, but I have a higher return, right? So that can go down to retail individuals who may want to do that, that can go to hedge funds, that can go to... So you'll have a much more fluid market in terms of matching the need and the investors than what you have today, because today it's still a little bit rigid in its structure.
So you were saying looking at an entity, it would rather look at the transactions, maybe for evaluating the funds which needs to be, risk-free kind of, maybe calculated risk and you pay off the stuff. So there is a good chance that it could go crowdfunding in future. Am I right? Or?
I don't know the future, but my counter argument would be that if we believe that could happen, I would have thought that would first happen for buying a car, or for buying a house, or for loan against your credit card, or for some unsecured personal loan, because those ticket sizes are small, the inherent risk is less, and the ability to fund in a crowdfunding concept is obviously much easier. That has not happened, and that has not happened to the extent that we thought it will happen, for certain reasons, such as assessment of risk. So I would say for it to move that way from a corporate and institutional point of view, where obviously we're talking hundreds of millions of dollars, I don't see that happening in a hurry, in the way we define crowdfunding to be.
High net worth individuals, hundreds of them come in and then take on, when I said crowdfunding, it's high net worth guys, other than the banks, who wants to get 3 to 4% return on short-term investment.
How about we ask these guys, say, if we wanted to crowdfund our deal here between a couple of cotton traders between the US and Singapore, you don't know either party, it's a volatile market, there could be price changes, and if someone gets a spelling mistake wrong in the documentation, there's no obligation for them to pay, and then you end up owning cotton. Who wants to crowdfund that at 3 or 4%? Any takers in that deal?
I mean, you'll get 3-4%, but 94% might go.
Yeah.
You know, so
There's a reason risk mitigants exist and why traders move into banks.
Yeah.
These are huge companies
Yeah.
who are saying, I don't want to take that risk on a single transaction because profit margins are so low that taking one loss on a transaction is just not worth it. So let's move it to the banks. And I think crowdfunders will be similar.
Yeah, Joshua, I get it. So I get what you were saying. That's a stake today. So when we started our discussion, we said supply networks are well established. People are, trading between. They have complete documentation which is digitized and it is available. So it's a fair marketplace for every bank to look at it and then take the risk in terms of funding it. But probably there are other institutions and other non-banking organizations can also come in or not, to state it in a different way. So that was the question. Like crowdfunding is more like open market guys, coming in, high net worth guys coming in, seeing a very solid trade between Cargill and probably Cadbury. So it's not like they're throwing money into a third party unknown traders. So that's fair, good business with the banks today. But it could move away from the banks. Am I right, or maybe I'm wrong? Maybe 5 years down the line.
I have no idea whether you're right or wrong, but ultimately it is about value of money and a risk-reward relationship.
Yeah.
If that high net worth individuals such as yourself think you're getting your return for that kind of risk, then you would do it regardless of blockchain or this conference.
Yeah.
That has nothing to do with banks.
Yeah.
Right? That's your investment appetite,
Yeah.
that's your risk appetite, and that's your return.
Yeah.
And these are, ultimately there's an equilibrium about, if some return is too good to be true, it is avoidable. So there's something about that sentence. Right?
So now I come back to the real question behind it. So do you think it can only be achieved with blockchain, mobility, and internet, or it can be achieved with traditional databases? Somebody's creating an exchange and people come there and trade for it. Does that make it relevant for the future? So that's the question.
I might make very quick comments. So whether to use blockchain or not is a basic question that I don't think there is enough sort of framework out there, but one that I saw was very Shakespearean in its heading, which said to BC or not to BC, and it had a whole flow chart about at what point you actually do a BC. So we'll pass that. But the other point is there is technology which is making business and transfer all quite borderless, but in a macroeconomic sense, unfortunately, it's almost data privacy is preventing it from being borderless, and trade barriers are rising, which is making it more, contained within borders as opposed to borderless. So there is something in there beyond technology per se, which might inhibit a mass multi-country adoption in a big way.
Joshua, at that state, does our rise up to using blockchain, mobility, internet, these technologies, and we are probably 5 to 6 years or 10 years down the line, we have this ideal world. That in that context, does it make sense to go with Sri Ram's argument, or you have something else?
What do you mean by mobility, internet, and
it takes, and we can assume that we have the entire barriers and paper related processes in terms of trade activities. All parties have come together, and there are multiple interoperable blockchains which exist, and then they can all work together. In that ideal world, in that world, do you think we are on the right direction in terms of blockchain as a technology, or maybe there are some other options?
No, I think we've hit something that really matches the problem really well. I think blockchain at its core is a decentralized network that encourages collaboration, that aligns incentives. I think the whole idea of reducing reconciliation by using a shared ledger, makes tremendous number of sense when you have complex cross-border transactions. And as you were mentioning around data privacy, Centralized databases just don't work in most parts around the world if you
Yeah.
want to put all your data in one place. So the idea of having a distributed database, again, makes a ton of sense. You know, the third angle to that is once you start looking at taking your liquid assets and giving them value through tokenization or other elements, then you're adding further opportunities for innovation and for creating new sources of value. So yeah, no, I have no doubt that blockchain in some form, you know, blockchain is a wide term.
Yeah,
We're not using.
We all agree.
Yeah,
with that, you know, so-
But it is going to drive the revolution of
Yeah.
digital trade.
Yeah. So Vishal, from it's our last round, so
No, I think, I mean, we've been talking a lot about alternative financing right now. It already exists, right? There are large trade finance funds that some are based in Hong Kong, some are based in Geneva, that we can tap, that we can call on if we want to. Do we use them a lot right now? We don't, and the reason is that the pricing that they give us doesn't compare to the pricing we can get from the banks. Right?
Yeah.
So obviously the banks are doing something good.
Yeah.
As Joshua alluded to earlier, trade financing as a whole, in general, is not an extremely profitable sector for the banks. It's a stable area of return, but at the 3 to 4% level, does it interest enough people outside the banking sector? It probably doesn't, right? So I think the banks can be rest assured that trade finance will remain, at least financing trade will remain within their space for the time being. What really excites me as a commodity trader is the potential to if we something that Jordan was alluding to was to try and move towards financing trades on a transaction by transaction basis. So if there was a platform for me to post a transaction or a series of transactions and have and see real-time price comparisons between the various banks.
You're collaborating with multiple parties or multiple platforms. So in that sense, yes, technology is helping. But trade finance is not purely technology driven, right? So the point was made, and I think it was clear. Regulations are there. In many cases, we have to comply with them. I'm not talking about financial regulations. I'm talking about, is a document, can it be recognized in a digital format, for instance, as simple as that, right? And then you have data privacy and all the others. So things needs to move in tandem, right? So I guess yes, we have certainly the right technology in front of us, but the technology in itself will not, revolutionize the industry because it needs also work on the other aspects.
It was very interesting. I think we took 40 minutes or 50 minutes, so a lot of information. So I think someone is recording this, so maybe we'll share it with everyone, so who attends the conference. So a lot of information from you guys, So thank you, for making it here. This discussion was personally for me, I found it very exciting, so because there was different contributions from each one of you in terms of our discussion points. I do hope that everyone agrees to it, so we had this mix of multiple thought process from banks and a large trader out here, and it was a debate on what could happen in terms of blockchain as a technology along with mobility and internet, which can help collaborate on a wider scale and then help to release maybe more liquidity into the markets. So thank you.
Thank you. Thank you very much.
So as the panel is leaving the stage, we have a last but not least session on the future of our data. And